8th of July 2022. This isn't financial advice. This is really an online journal for me to hold myself accountable, and I'm really trying to improve my trading. My strategy is to make as much money as I can when the going's good, and really not try and give too much or any of that back. Withdraw that and buy property generating passive long-term cash flow. This is going to be the last video of my 2022 review. Some of the stocks are sort of current at the moment, actually starting to shape up a bit, so I want to finish off this review. So this period is from the 12th of November to the 30th of June. The market had a shocker. The Nasdaq was down 30%. I was down 12, which I'm not happy about, but at least it's much better than the market. Again, lots of learning from this exercise. And a lot of the drop came from that November to January period when still had a lot of exposure to yesterday's leaders, especially in options and semis, on options on semis. After January, things really sort of tightened up for me. Well, because I just wasn't trading as much because the market was just clearly sort of going into a downtrend, so I really sort of just backed everything right down. But actually, really, in many ways, thanks to these videos that I've been doing for the last 6 months, I really started to tighten things up. So I did that 30-day challenge a while ago, and I really honed in on those. Should just be buying stocks that are in pullback or consolidation time and time again. For me, buying breakout stocks doesn't work. I'm not doing this real time. I'm usually just up for the last hour of the day because of where I'm based, which is Sydney, Australia. But yeah, just focus on the pullbacks, and like I say, these videos have really sort of helped highlight to me where things have sort of been going wrong and where I can do things better. So let's get into some of the trades. The first one is SIMO. So I sold this, would you believe, on the 12th? Yeah, right there. That is just inexplicable. Wasn't really doing anything wrong. I can't recall exactly why I sold it. Maybe I thought, oh, the option premium, sorry, these were options here, maybe the options are going down. Well, they were. As a sort of time is moving on, there's time decay at play there. But like I said, it wasn't really doing anything wrong here at all. It was just basing. So you could make an argument that maybe I should have sold before the 50-day rolled over, and maybe I got a bit biased because then the thing just exploded after that. But I'll tell you what, even if I said, right, I'm going to sell 50 days rolling over, there's time decay at play. When it started recovering from there, should I have been buying? Yeah, I don't know. I was just looking at the amount of the portfolio that has actually really small, like 0.5%. So there's really sort of no harm in just continuing to hold there. Anyway, I sold those options for $1.30, and a few weeks later they're about $7. I mentioned in the videos at the time I did hold SIMO, continued to hold SIMO on one of the other accounts I held, which is not in these numbers here, and that worked out really well. But I actually made this same mistake, as it turns out, that I'm going to go through another examples here, which is sell those options, which is good. It's basically selling in strength, but then buying further out of the money options, and yeah, basically dusting my cash there. So pretty much all the reason I lost money, a good chunk of the reason I lost money in this period are two things. I was playing with house money, so I made all this money in these options, sold them, rolled up, playing with house money, and as the market fizzled, they all went down. And the other one area that I lost money was actually got a bit sloppy in this November to January period. So I'm going to go through specific examples there. But anyway, that first that transaction in Lucid there, sorry, not Lucid, SIMO was pretty. I think it was pretty uninspiring, to tell you the truth. Lucid, I sold more Lucid. Right, when did I sell it? 12th, 11th. Made money there. Mostly happy. Could there be an argument that it was still very clearly moving up there in an uptrend, and I think I can't recall if I sold partials before this period. Should recall because I just did the video, but yeah, maybe try to squeeze them for more. I don't know, but good little trade there. Key point that's coming out is selling into strength, sell some into strength, raise your stops. But the amount of times you think a stock's just going to keep going and going, and it just doesn't, it rolls over, is extraordinary. So the only times that I've got this in my business plan to be really try and be position traders coming out of major market downturns, stocks that are undervalued, that they can move a huge amount. So you don't want to be too greedy then, but most of the rest of the time, just be selling into strength and being happy. So the saying is, when the ducks are quacking, feed them. A number of times I really should have been doing this, so I'm going to make a much bigger effort at that. Lending Club. November 15th, I bought that. Yeah, right, and that sort of down day. So big down day, I really shouldn't have been buying there. The logic was, though, look at these numbers, big leader of the time. I'll say he wasn't really a big leader, but anyway, it was a bit of a go-go stock at the time, doing all the right things here, big breakaway gap, holding its levels here, then doing the same again on even faster accelerating earnings there. Buying on a pullback here. So I think I was sort of, despite how it turned out, sort of roughly right there. I was like roughly right. Yeah, I can see I'll give myself a 5 out of 10 there. I probably should have waited for an upside reversal there. Maybe could have been a little bit more patient, but not the worst trade in the world either. Where it was the worst trade in the world is how I handled the exit. So I got stopped out on the 22nd of the 11th, which was here. Now, this is almost embarrassing to admit this. So, like I said before, during this time I was gotten sloppy. I'm going to address the reason for that, I think, in a moment. But the result was I hadn't put hard stops in, and I was just sort of waking up and seeing what's going on. And then sometimes, as it turns out, I was just letting some of these stocks, the loss just blow out bigger than necessary enough. I just put a stop loss in, like I've just been doing the last 3 months. Again, thanks to these videos, I really sort of why don't I just put the stop loss in and just, sometimes I'll get shaken out intraday, but that's fine. At least the decision is made for me. This sloppiness cost me unnecessarily. So I bought it at $43.99 and sold for $37.84. So that's just an unnecessarily large loss. Right, similar theme, Shopify. Bought this 15th to 11th. Okay, so first lesson here, yet again, me buying breakout stocks is either I'm not very good at it, or it just doesn't work. So you can kind of see the logic here. It's sort of been basing, all right, it's pushing away, let's go, it's all to all-time new highs, and let's go. I just can't tell you how many times it just doesn't seem to work. So unless the market's exceptionally strong, this is just tough work. The other point I've got here with Shopify and many other trades of the day were these were stocks that had gone up by so much. These are like the new e-commerce or work from home type stuff that were wildly in favor and had a huge bull run, and I was still in love with them and still trying to squeeze out those last few sort of pennies out of them when there was just better sectors out there, and I just wasn't even scanning for them. As silly as that sounds, but that's, I was just focusing on here. So not being open-minded enough to new sectors that people aren't sort of talking about, and just focusing on there. So big picture, not great. But then equally, buying this at this point here is just, for me, time and time again, asking for trouble. Where do I sell? Where did I sell? Shop. Board. Where is it? Sold 13th of the 12th. Yeah. So another mistake here is didn't have a proper stop loss plan in place, was sloppy, thinking she'll be right, and it's not all right. So I let even if this is an okay entry point, I should have just had the proper stop loss in there and just had a much smaller, much smaller loss. So the erosion in value I've had during this time period, as I was saying before, is just, I think the key word is just sloppiness and a bit of greed. And this is like another case where I did it wrong. I had a position in C. I sold that 16th, 11th. Starting like a bit stage 3 there, so that's fine. Obviously I didn't know it was just going to totally collapse after that. Again, the key lesson I'm sort of taking out here is C was one of those wonder ones that went up from, what was it, $40, just some huge price movement here. Apparently it was an amazing company, and blah blah blah. So again, I was sort of chasing late stage sort of stocks here that I probably really shouldn't have been in. Main thing, yeah, that's probably the main thing there on that one. Right, let's keep moving. Plenty goes at this one and never really managed to make it stick. The Chinese EV maker. 17th to 11th, bang. Let's go, let's have a look. Again, another breakout stock. Fails. I was thinking there it was going to be a new stage 2. Around here somewhere. May not have been, I think it wasn't sort of such bad analysis, but again, I'm just buying this breakout stock, so it's just not working for me. And the other thing was, it was only a few days before earnings. Now, these were options, to be fair, but yeah, this is like just death by 1,000 cuts sort of period, just being sloppy. I spent about 1.5% of the portfolio on them then, and I need to, where did I sell? Sold 17th of February. Now I remember this, to cover this video, the final sell wasn't too bad. Very scary drop here, and sort of wedged up to 200, so that struck me as a good as place as any to get out, which turned out to be the correct thing to do. Now, because it was options, I don't necessarily have the same stop loss process in place. I'm trying to more allocate to the option what I'm happy to lose, so I'm happy for it to sort of have a lot more volatility, if that makes sense. So, but yeah, again, I just look at it and think, well, I don't know, it's just everything was a bit sloppy, but a pointless trade. Buying it just before earnings, it was really starting to give up the ghost there. Anyway, I think it was the right thing to do to sell. I'm happy with that sell decision there. So it just shouldn't have been in this one, I don't think so, or at least where I bought it. Tesla. I think I'm the only person on earth who's not managed to make money out of Tesla. 17th to 11th, yeah, bought it on this pullback here. One thing I've noticed, this period I was starting to get a bit tighter with some of the entries, or some of the, that's not entirely true, I was still doing sloppy stuff when I'm buying on breakout, but at least I was getting some better pullback buys in. Made a huge move here, looked like a new stage 2, plenty of people out there thinking it's a $2,000 stock, and don't think it again, putting aside the big picture, which I really shouldn't, but the big picture was this thing had just 10x'd. The market had gone completely nuts. We're at the end of, but you weren't to know, but there was this sign starting that we're at the end of the cycle. The Nasdaq breadth was deteriorating. But anyway, got to be in it to win it too, I guess. So bought it here and sold it. Seventh of Feb. Right, mistakes are pretty obvious here. This was another one like say Shopify. I think I was still flirting with the idea of buy and long-term hold. So bought it and then sort of selling it. So that's just sloppiness. For me, I just need a stop loss in place, either just a percentage move for a stock or a dollar amount allocated on an option, and just be done with it. Sold it here, so just gave back more money than necessary. I should say, and also talked about this in videos at the time, at least I sort of woke up to my senses before the real damage sort of started coming into some of these stocks. Because let's look back at Shopify. Now, Shopify is considered the absolute king, and it's the thing that might even knock off Amazon, and it's just been totally crushed. So when the market turns, I need to remind myself, you just don't know how far down stocks can go, and likewise in a bull market, you just don't know how far up stocks can go. Hayward pulls. Bought that here, one of those 2 days. Let me check that 70th. Yep. So bought it there. Another breakout stock, but look, stock that sort of just had a few good days and then goes sort of parabolic. I mean, I should be selling the thing there, not buying it. That was just stupidity. Not exactly a leader of a name here either, but pool equipment for the residential market. Anyway, again, if I just buy good quality stocks in an uptrend that are consolidating and pulling back to key points, I think I'm just going to clearly save myself a lot of hassle. And I remember that when I did that 30-day challenge, I went back and reanalyzed the numbers. And if I just didn't buy the breakouts and just bought the pullbacks, my numbers were, my numbers were actually really quite good. So, Ambarella. This is one where I had stocks and options, and so let's just go through these individually. So 19th, the 11th, I sold the stock. Pretty happy with that. Discussed this in the previous video. This is like a frozen ripe type weird action, and once it's broken, it's broken. Might have been a case that I should have just seen how it went. It's just a pullback to the 21-day moving average. If I hadn't have, so you could argue, was it a good trade, was it not? I'd argue like at least selling into strength was good. You could argue that if I held on and just experienced it through here, and then it was clearly a sort of diamond shaped stage 3, like look at the sloppiness just coming in very quickly there. Selling it anywhere around here was entirely appropriate at that point. So speaking of which, on the 2nd of the 12th, I sold, sold call options that I had, which is really happy with that. Just to make a mockery of what I was saying, I actually did sell into this this topping sort of phase here on the options, but I used half the cash to buy further out of the money calls on the same day, which, again, not to know. And then I sold those options on the 20th of the 12th. as I was coming to my senses. So that last trade cost me about 1% of the portfolio. So those options actually halved in value really quickly, which is interesting. Not quite halved, but at least I sort of cashed out of all the profits I made here and just taken some money off the table then when this just wasn't working. So overall, I'm actually pretty happy with that decision. It was real talk. This was like in the semi space, which is completely on fire at that time. This could have been like a real sort of mega leader. Could have just kept on going. So at least I had some skin in the game still, and I did at least reverse my decision quickly when it turned out that was wrong. If I'd done that sort of same sort of process as some of the other stocks, I would have been much better off anyway. End phase. Sold 2nd of December. Happy with this one. It's had a tiny little bit of money, but more to the point, yeah, I remember in December things are starting to get pretty sketchy, pretty shaky. This looks like a sort of VBR sort of blow off, and I knew that the market then I think was sort of getting a bit amber, or suspected I should say. Can't claim these things, and so I've got in my notes, in an amber market, which to me is sort of late stage, things are sort of drifting up, but underneath the hood things are starting to really sort of not look so good. Just sell some. So because when it turns really quickly. So I've made this mistake plenty of times where I recalculate the portfolio value every day across the accounts I've got, and it's ticking up. You're feeling good, and you're kind of just psychologically getting sucked into this phase where you're about to get your head chopped off, but you don't really know that it's coming because there's a little bit of a sugar hit every day. So happy with the decision to sell here. AMD. Now this was both an incredibly good trade and an incredibly cock up at the same time. So AMD, I'd held that from the previous period. Now I made, where is it? I just deleted it. Some huge profit on this one. I think I bought the options at 15. Yeah, I did. Sold them at $38 on the 2nd of December. Again, it's like, I'm not sure about the specific day, but just gone completely nuts. Almost like a sort of, see that sort of double top sort of action there, ish. And then so I'm going to take some money off the table. So yep, selling in a strength. And what I did at the same day. So sold that, and for about just under a third of the cash proceeds, I bought further out of the money calls. So again, keep your hat in the ring. And what then happened was proceeded to lose just a boatload on those calls. So a chunk of the performance from the previous period, from October to November, was due to AMD just going nuts like this, and then it took my cash out and proceeded to give back a good chunk. So part of my negative result for that period is literally just handing profits back. Where do I sell it? 7th of March. Yeah, it's just stupid, isn't it? So key point I've got for this period is I had big winnings from the previous period, and then just got sort of too loose, too happy to give stocks room, sort of too happy to play around with profits, too happy to play around with house money. So towards the end of 2020, early 21, I was starting to go to this idea, well, if I can buy a stock and goes up and I take all of my cost base out, therefore the rest is free, therefore I can just sort of be more liberal than just see how it goes. Now, I think that's dangerous, quite dangerous thinking, because that's not really it's not taking into account the losses on the other trades to get there, and then by doing the sort of house money sort of idea, you're almost, look, you just start to ignore what the charts are telling you, what the signs are telling you. So you might say buy something for 100 grand and it goes up to 200 and sell half. So right, the 100 is free. I'm just going to see how it goes. But well, yeah, tell me about the 30, 40 grand you lost on other trades, and then we'll just say call it 40 grand. So it's actually really only 60 grand of house money. But it doesn't actually take much from that remaining position to go down by 60 grand. All of a sudden, you haven't made any money for that period, or even lost it. So I did that with an Australian stock, big time. I was up 15x at one point, and I've took all my cost base out. Thought I was going to keep going, and it's just been slammed since. So got that in my plan. I've got a psychology section. Is be very don't get sucked into playing with the house money rule. Now, I think there's a case where you might say bought AMD here, sold some. You have taken your cost out, but it's not to say you should. And then you can be a little bit more liberal with the rest, but that doesn't mean be completely ridiculous like I did here and waited until clearly it was in trouble. You can see it sort of rolled over and then tagged the 50 and rolled over again. Now, around here it was definitely becoming obvious, and I could have got out much earlier, and maybe even here as things were starting to crack in the market. So yeah, still apply the remaining techniques to the remaining position, albeit you might say I'm happy to give a bit more wiggle room, but equally don't go to the extreme like I did here in a number of these cases and give it just way too much wiggle room. It's so depressing giving back profits to the market, which is incidentally sort of feeding into my general strategy of, well, I just want to make money so I can take it out to go and buy other non-market investments. And I'm hoping that really will help crystallize my process, because I don't want to make all this money then think I'm in the market long term, I can afford to have volatility and play with house money and blah blah. No, it's there for a purpose, which is to get it out of the market to buy cash flow property. Right, I digress. I'm not going to go through every trade here. I had another go at Facebook. Bought it 13th of the 12th. I don't think this was too bad. Yeah, and this might be Harry hindsight, but again, that big picture thing, that tech had already moved a lot. But the actual entry here, I don't think was too bad. Pulled back to the 200-day moving average, 50-day flattened out. It just didn't work in this case, which of course is going to happen a lot. I do think I have talked about this in a video previously about buying a stock when the 50 is declining, but sort of wedging between the 50 and 200. I can't recall the exact trades, but the ones that I'm looking at here, I might as well. I think I'm better off on balance just to be patient and wait for that 50-day to be sort of turned up properly, rather than you're buying in this sort of wedge zone here. And don't get me wrong, this can work really well, but you're also taking the gamble that this is just a minor correction. So it's something I'm going to spend a bit more time looking at. But Mark Minervini, people went through his trades, and he just doesn't buy anything that has a declining 50-day moving average. Now, if it's good for him, it should be really good enough for me. Apple, really happy with this trade. This is an example of doing it right. I sold the call options here. I made 140% return. 13th now. Yes, got a bit lucky in terms of the top there, but what I like about this trade is good stock to trade, but stretch from the moving averages. And so we look back and think, oh, of course you should, but at the time, I can't remember what news were, but Apple's taking on the world and doing this, and people are cheering, and to force yourself to sell into that, we go, oh shit, it could go higher and higher. So for me, selling into strength is such a winning idea. So buying pullbacks and selling into strength. I mean, it just sounds like common sense. You know, unfortunately, it's taken me years to sort of come up with that. But I discussed this in a previous video. I think I bought it around about back here somewhere, which is not good. Again, buying a breakout. Now, if I was sort of just more patient and bought it, say, after even like here, imagine how much more money I would have made because that time period and the options would have been so much shorter. So could have made what an easy 200% return very quickly on the options. And this is what I love about the market, is that if I get this right, when you get this right, you can make a lot of money very quickly. All right. I went on this semiconductor buying spree in December. Now this is with options. I bought MU, this is the Nancy Pelosi one, I think. I'm not sure, I was saying I bought it there, it's just stupid. Should have, well, that was just earnings there. Maybe I could have taken a punt with options because everything was setting up quite nicely there. Anyway, bought it up, sort of already broken out. Again, me buying breakout stocks doesn't work. I'm just going to have to keep telling myself that. Marvel, similar one, same day, went on a bit of a buying spree that day, 23rd. It's pretty smart, pretty much bought it at the top. If I was going to be buying it, should have been really back here. Now, so one point I've put for myself to be very conscious of, again, this is a psychology thing, is not to fall for the narrative fallacy. So the narrative at the time is that there's a huge shortage of semis, you have to wait years to get a car and all this, and factory shortages of semis, all the rest of it. But the reality is, and look, that's not saying that's actually wrong, but by all accounts it actually seems to be dead right, but the market had already sort of factored that in. So me falling for the narrative fallacy, I've got to be very questionable of it. So what I actually try and do now is say, well, everyone's talking about that, and this builds into my big picture. Everyone's sort of been talking about that. Stock prices have already moved a lot. So look, high likelihood that's already factored in. And this was sort of a blow off top, sort of a move here after, it was only $40 and then 80 so very quickly after. Similar thing with Marvel. Sorry, that was Marvel. Similar thing with AMAT. Bought that 27th of the 12th. Yeah, again, buying a breakout stock just because it moves to all-time highs doesn't really mean much. If I was going to be buying it, should have been in these sort of pullback periods. So again, mistake was buying a breakout. I went too concentrated into a sector because fell for the narrative fallacy. And then to make it worse, a lot of these trades, because they're options, I thought I can afford just to sort of ride it out. But this was 1.5% of the portfolio, and then the whole bunch of those were just the 1.5% of the portfolio, and all of a sudden you've just dropped 4 or 5 on that. Then it doesn't seem like much at the time, but then all of a sudden your portfolio is sort of just getting death by 1,000 cuts. So okay, so yeah, the key things there: buying breakouts, narrative fallacy, which led to concentration risk. And then believing the narrative when the charts were telling you, see here, where it sort of fell from the 200, 50-day rollover, 21-day rollover, and then sort of couldn't even get above the 200-day before it rolled over again. Now I should have, I think I let a bunch of these just expire. I should have just got out, and I might have only had for my 0.5%, 1%, 0.3% left. But like I say, it's those little things that start to add up. I'm going to go through too many more. Ones that I'm just going to make myself feel a bit better. A couple of trades I was happy with. Tesla, so I remember talking about this in the video at the time. Bought it on the 2nd of February. Here, after it sort of bounced off the 200-day moving average. Sold it a few days later on the 7th for almost exactly what I paid for it. Now, why I'm happy with that was, this is when I was starting to really get my act together, especially as doing these videos, sort of, you know, talking about this publicly, or when I say public, I'm not sure who's even listening to this, but going over the market median, it's like, hang on, he's not buying above the 50, so why should I? So I just changed my course, sold it. So I'm sort of happy I've recognized in real time I made a mistake and sold out. Two more trades. I have talked about this in previous videos. Zim, 1st of March, bought options. Not the worst entry. Pullback, but sort of the previous resistance, nice upside reversal day. What I'm really happy with this one is I sold it on the 16th of the 3rd. And this is just before a huge ex-dividend date. Selling into strength. Tell you the truth, I should have owned the stock because the current dividend was a huge dividend. So, and it actually took a few days for the stock to roll over after that. I couldn't figure out why. So, anyway, sold it the 16th. I sold that because it was going X, and I thought that the stock would do that straight away. Not eventually did that, but not for a while. But just having the discipline to, again, selling in a strength. This was shippers were all the rage. Zim was a real sort of favorite on Twitter, and it was cheap and it was growing, and there's all this sort of cargo demand around the world, and cargo freights were through the roof. So you were selling into that narrative of hugely sort of positive news for the area, for the sector. Sorry, so I'm really happy with that. And again, I just stand back and look at the big picture, and you know, if everyone's saying X and the stock price has already been sort of bubbling away in that sector, then yeah, don't be afraid to be a bit contrarian and, you know, sell into this strength. I'll wrap it up there actually with a number of trades. I've talked a lot. Okay, so just in summary, the November to January period was sloppy. Just about all of my losses for that period were through to here. The only reason I lost any sort of money from Feb to June was those remaining semis options positions, which I just should have sold. Otherwise, it would have been probably still a bit negative for the period, maybe a few percent versus minus 30 for the NASDAQ, and that would have been an amazing result. Would have been so happy with that, considering I don't short. So yeah, keyword sloppiness. Didn't have stops in place. Now I put the stops in when I put the trade on, like literally into the platform. Many examples where I didn't do that. Stand back and look at the big picture. Take everything into account: the narrative, what the charts are, what the markets are, what areas are coming out of nice long bases, what areas that have had just sort of huge runs. Be open-minded. So again, you can see I was just focusing on tech and semis, and be decisive on selling. So that's really for me, just putting stop losses in and having a plan and following it. Not saying, oh, I'm sort of buy and hold this one, see how it goes, and now I'll sell it. Breakout buying, really hard work for me. Buying after BGU, usually the best thing for me is just to wait for a consolidation or pullback, knowing full well that every now and again there will be a stock that will break out and then will just explode. But that's fine. There's traders for that bull. We'll make that money. Free rolling profits or playing with house money is really dangerous for me. I need to ignore if I've taken my cost base out or not, and say, right, well, here's a position. What are the charts saying, regardless of whether that's funded from my own cash or from profits. A good example, actually, I didn't cover this, was Datadog. I made a huge amount of money rolled that into options, which were also sort of a pretty big part of the portfolio, but they ended up costing me 4% of the overall loss for the period. So, and that was due to, oh, it's just house money, it'll be fine, don't worry about it. So yeah, again, just being sloppy. Saying that, I had some good decisions, particularly selling into strength, Apple, Zim. Happy with proactive. Some of the proactive decisions. Enphase was one there. I was selling into what I call an amber market, which is when things are drifting up just before you're about to get your head cut off. So I think all this leads to me is having a process. Like go through the CanSlim stuff or Mark Minervini. Put together a business plan. For me, I'm trying to condense a business plan down to 6 pages, so something I can, understand and memorize. And when I do this video, I'll go through and say, right, have I got the appropriate things highlighted there? I've got my learnings there. Do I make sure I've actually understood this lesson? And then honestly, just follow the process. So in many ways, just dumb it down. There's a guy called Ryan Pierpont. He just dumb this thing right down. And follow a process, and look, is really right. Anyway, that's the last of these review videos, at least for the time being. I'm going to get back to the current markets soon. Things like Chinese stocks are starting to set up, along with other things like Pfizer. So anyway, I'll address those on future videos.